Hello and welcome to FinextraTV. I'm Liam Sevier and you join us at the Temenos Community Forum in Copenhagen. With me right now is Ed Torres, the Senior Vice President of Global Partnerships at Temenos, and Yves Dupuy, the Global Leader for Financial Services Solutions at AWS. Lovely to have you both here.
Thank you.
Thank you.
So Yves, if I can start with you with a relatively simple question, perhaps loaded as well. Are there any banks left without cloud infrastructure? And if there are, what's actually holding them back?
Yeah, in reality, this is very simple because anyone with a PC, an internet endpoint, and a credit card could access to the cloud and to AWS. And that happens even for banks as a starter. But obviously, when they get a little bit more serious, we can see several patterns. Sometimes they start by using SaaS solution because it's relatively easy for them. And we've seen that quite a lot over time, and this is even accelerating these days. Other banks, they decided more to build and differentiate by using the cloud, and they feel that this is a great way to offer better service, to optimize their cost, and really create a competitive advantage. What is holding back the other? Because not everyone is fully in the cloud these days. It's not the technology, and contrary to the popular wisdom, it's not the regulators. Because regulators understood a long time ago that cloud could bring benefits in terms of security, in terms of, and even in terms of compliance, provided, and that's an important caveat, that banks have a very robust risk management framework. So in my opinion and in my experience, what can hold back certain financial institutions is, one, the lack of skills, of skilled resources. And when you try and apply processes of the past, of legacy system, of mainframe, etc., onto the cloud, no surprise, you don't get the benefits, and that could be disappointing. The second reason is that leadership and the C-suite may have some preconception, which date back to their early days, and some of those preconception may not apply today. And then there's the cost, because of course it's not for free. And there's an investment in skills, in technology, in run costs. In the medium term, there's obviously a benefit. We estimate that banks can save anything between 20 or 40% in their total cost of ownership. But for a period during the transition period, there's double cost. And the reality is that some of the banks, they just forget to decommission the old stuff, or they don't go to the end of the exercise. And as a result, they don't see always or immediately all the benefits.
Really interesting. And Ed, if we're talking about the convergence of SaaS solutions with cloud infrastructure, I feel like we hear convergence a lot in the industry over the last couple of years, but with this particular one, what does that mean for the end user? Why is that an improvement?
Well, this is actually a quantum leap. The capacity to merge SaaS with cloud, the first thing it does, it provides for 24/7 banking operations, for instant payments approvals, for instant lending approvals, which increases the satisfaction, the perception of the customer of these services. So most definitely, the capacity for the bank to be seamless and running, always on running, is definitely one quantum. Second one, which is fundamental, is the merge of SaaS with data. That allows you then to build proper, hyper-personalized offerings from the banks, which allows them to basically tell the customer, or flip, I should say, asking the customer what they need, rather deliver them what they actually need. Because you're using this data in real time and allow to mine this data and put it to work to deliver these services. So that also increases satisfaction and acquisition of customers, because you're actually delivering them what they are actually seeking out in the market. The last one, I would say, and it's actually fundamental and critical, is resilience. The capacity to deliver on a continuous basis code updates on a SaaS environment as opposed to legacy patches that you have to wait for for weeks at times. Allows you to be always on the latest version, reduces outages, and reduces basically friction from the end customer side as the customer perceives these services from the financial institutions. So in essence, all these different components and many more, provide a quantum which is translated in a better customer experience at the end of the day for the customers, and is enabled by SaaS and cloud.
Really, really interesting. And lots of big changes there by the sounds of it. Yves, if we look back perhaps 10 years, it's a long time for the financial industry, a lot changes. What has changed for the SaaS market, and where are the big wins?
A lot, obviously. I think it started by the adoption of what I would call more the horizontal SaaS services. They are the ServiceNow of this world, for instance, or the CRM, the ERP, all those nice acronyms. The banks have usually been a bit late in the adoption compared to manufacturing or other industries, but they've been through this process. It is relatively more recent that they've considered more the verticals or the industry solutions, such as Temenos, as a SaaS proposition. Various reasons why it's taken a bit of time. First of all, they were not necessarily ready to hand over to a third party what they felt was a critical business process. And the second element, so that's the demand, and also the supply, because let's be honest, a number of software vendors were not fully ready to operate with the SLA requirements that were expected from the banks and their regulators and even their customers. So that was the reason why. Now, what I observe is a quick acceleration. We are already at this inflection point where demand is there and supply is there. So it's important. And we see that happening. So much so that the majority of the new banks or the banks that go to package solutions for the first time, they go by default to SaaS. Where it's a little bit more tricky is for the customers who have already made the choice of the package solution, but on legacy infrastructure. And the question is how to upgrade and migrate. And Ed alluded to that. It's the major driver for the future growth, in my opinion, but this is also the major obstacle at the moment, because those things are quite complex. It looks like a little bit like heart surgery today. And personally, I was absolutely amazed by what has been presented by Temenos during TCF, because through agentic, I'm absolutely convinced that we can make these operations that were in the past quite difficult, risky, expensive, lengthy, something much better. And talking with Temenos, but also some of my other partners, I see that the majority of them are building specific offerings to manage this upgrade, this migrate things. And the value of SaaS beyond the standardization of the business process becomes you are evergreen. Without looking at the version, you can leverage the newest, you can use the newest features available. And because they are the newest version, they are compatible with all the GenAI kit that is being delivered or will be delivered, because we are just at the very beginning of that new wave of adoption of cloud.
Really, really interesting, both of you. And imagine if the last 10 years has been a lot, no doubt the next 10 years is going to be even more. So thanks for joining us and sharing your insights.
Thank you so much.
Thank you for having us.